Welcome to today's video. Today's video is related to the Dow Jones, more specifically the E-Mini Dow Jones Futures Index. And you can see more detail about what we're going to discuss today in our article titled The Anatomy of a Trap, Why Structure Alone Isn't Enough. We'll come back to the article in a moment, but back to the chart here. So what do we see? First thing, we can see a rising wedge, very obvious one, and we can see that as the price movement at the time of the recording is down, with the Dow Jones futures down by minus 0.84%, we can see how the Dow Jones is reaching a critical point. In one hand, we can see that it's reaching the bottom part of the rising wedge. If the rising wedge was to behave as technical analysis suggests, and breakout was going to happen, so then we would see the price of the Dow Jones going down potentially all the way to where the target is, around 42,000. That would be what technical analysis would suggest in a normal case. This becomes even more relevant given the fact that it's looking like we're gonna soon test the bottom part of this rising wedge, but we also are in a situation where this prior all-time high that became support the moment price traded through. Obviously a resistance becomes support. That's again technical analysis, basic technical analysis. So that price level is coinciding with the intersection of the wedge in the bottom part. In other words, this price level around where the Dow is trading right now, 48,600, 48,500, something like that.
If our videos help you stay sharp episode after episode, hit pause, like, subscribe, and keep learning. Your support means a lot to us.
This price level is very relevant because of those reasons, because if price was to trade below this line, a bearish sentiment may kick in. Okay? Again, we're going to talk about why the name of the article has the word trap in it, because obviously everything I just said seems very clear, and that's precisely why very probably we're going to have a trap. Anyway, for the ones of you that are watching this video for the first time, just know that if you take a look at our Tradictive profile page on TradingView, you will be able to access hundreds of trade ideas, trade articles, which are very educational. And hopefully this could be very helpful for you all. But anyway, back to the setup, okay? And as discussed here in the article, you have the price level I was mentioning, 48,528 to be precise. As we are testing this particular price level, the thing is that right below price, there is a UFO. Now, for the ones of you that are not aware of what UFOs are, I'm turning on here.
Are you ready to level up your trading skills? Visit and follow our TradingView Ideas page. You'll get actionable insights and training materials for free. Scan the QR code or use the link on the screen to keep in sync with the markets.
AutoUFOs to identify them. So we can see here between 48,004 and 47,504. There is an area where unfilled orders to buy are potentially waiting to be filled. Unfilled orders is actually what UFO means. UFOs is an acronym that basically mean unfilled orders. So in other words, we got a significant amount of unfilled orders thanks to technology for that. And therefore, if price was to trade below and many traders become extremely bearish, trading the breakout to the downside, expecting reaching this bottom target around 42,000, guess what? Probabilities suggest, of course, nothing in trading is a guarantee, which is why managing risk is such critical, but probabilities would suggest that this UFO price level would inject a ton of buy orders, helping for a turning price to take place. And that's the trap. All the short traders that would have been shorting in this orange circle would be trapped as the market starts moving in the opposite direction. And here's the beauty about traps, not that we like people being trapped, but being on the other side is beautiful because not only you could certainly potentially catch a very good entry price into a new movement, but the beauty is that the moment price was to turn around, all those short traders that were in pain, they would find themselves in a position where they have to cover. And to cover, as the market is going up, the higher it goes, the more in pain they are.
Are you ready to level up your trading skills? Visit and follow our TradingView Ideas page. You'll get actionable insights and training materials for free. Scan the QR code or use the link on the screen to keep in sync with the markets.
So the more they have to cover, and covering short positions equal to buy, and these buy orders would potentially help the move to continue moving higher. That's why sometimes we see these very violent reversal price points, which, like here, for example, very violent movement in the opposite direction, where it's like the world was ending and suddenly such a powerful move in the complete opposite direction, and people are left wondering why. People being trapped is typically the ingredient that fuels speed in the opposite direction when that happens to such traders. Anyway, more detail on the article. I welcome everybody to read it carefully. Plenty of detail here that could be useful. Of course, everybody's in a different stage in their trading journey, isn't it? Some of you may be very experienced, some of you may be very new, some of you may be somewhere in between, and well, the article will have maybe some sections more useful than others to you, but I'm positive that it could be quite useful to everyone, especially if you are more curious to understand a bit better what traps are and how to avoid being trapped, or even more interesting, how to take advantage of a trap setup instead of falling into the trap. Hopefully you enjoyed the article. I will see you in the next one. Take care.
If our videos help you stay sharp episode after episode, hit pause, like, subscribe, and keep learning. Your support means a lot to us.